All right. Good morning, everyone. It is 8:24 in the morning of May 18th, 2022, and this is my pre-market strategy session. So, I had titled today's video "Oversold in the Pre-Market," and before I go into that, I actually want to say yesterday I published a video. But for some reason, YouTube has decided to flag it and not publish it. I went through and looked at the video again, and I can't figure out why YouTube did that. I have no idea why YouTube. There's nothing. I didn't do anything different that I'm aware of on yesterday's video. So I hope that today's video gets published. Okay, so oversold. All right, so here's the volatility index, and now oversold in the pre-market is kind of how reliable is it? It's not exactly that reliable because volumes are so much lighter in the pre-market than they are in regular hours. But essentially, what you can see here, I've got the 5-minute VIX and the 10-minute VIX, as well as the daily VIX up here, right? And what I'm saying, the reason I'm saying is it's oversold is you got the VIX. Oh, where'd it go? Here we go. You got the VIX right here, kind of coming out of overbought conditions on both the 5-minute and the 10-minute. And if we go and look at the Qs, you got the Qs coming out of oversold at the same time. And so here it is in oversold, and here it is in oversold. Maybe actually I'll make these larger so it's a little bit easier to see. Let's see. Here we go. So here's the relative strength index. And now relative strength index, pre-market relative strength indices aren't as reliable as sort of regular market hours. However, it does seem as though it's reliable enough. And yesterday, you can see here, it was coming out in the pre-market. It was coming out of overbought, and then it sold off. So, I mean, if I were to guess, and I am guessing, if we're still coming out of oversold conditions at the open, looks like we'll probably have a pretty decent little opening session to the upside. That's the way that it looks right now. Things could change. We've got a little bit more than an hour. We've got about an hour to go before the open, and so certainly at this point in time, both the VIX, the VIX could go all the way back into oversold in that time, and the Qs could go all the way back into overbought by that time. So, as of right now, though, it's looking like there's going to be a pretty strong open. What happens after that, I don't know. In fact, I don't even know if there's going to be a strong open. It's just looking that way right now. So a little bit, if the Qs opened up right now, they would open up 0.94% lower than yesterday's close. Yesterday was actually a really classic shake-off of these are the bulls shaking off the bears big time. Really interesting here. I mean, it really, the morning, this is at least on the Qs, the morning started off, and looked like it was about to start selling off like it's done so many times, and then just kind of reversed, drifted up. And then as soon as it looked like it was starting to just start ripping up again, they knocked it down to shake out all the weak hands and then ripped it back up again for the close. That's pretty classic behavior. That is really this is a very typical day in the stock market on any given other bullish day. If this were back in say 2019, into before the pandemic, into 20 on a bullish day, this is what you would see. You'd see the morning session hit its lows right around 10:30. And then pick up bullish, and then the afternoon session right around 2 o'clock, shake out the weekends, and then rip higher. And not only does it shake out the weekends on the long side, it sucks in a whole bunch of people to the bearish side too. and then just takes off to the upside, just to sort of, create liquidity events for, intraday, for just picking up that the premiums on options contracts. People getting whipsawed back and forth, and that's how Wall Street, that's how the trading session works. At least that's how the big boys work. So right now, as of right now, it's looking like a strong open. Of course, that can change. There is an hour until the open. But yeah, right now, if it were to open right now, I'd say buy the open. But just keep an eye on that for the open. What else is going on? The dollar looks like it's trying to bang out a little bit of a bottom in this little dip that it took here. This is the up, actually. I should use the other one. Let me go to the Dixie here. So the risk range on the dollar you can see here is 102.52 to 105.11. Now it changes daily, so don't just play off of this right here, off the dollar. But essentially, even though the bottom of the risk range is down here at 102.52, the dollar is really strong because basically anytime there is a perceived weakness in the market, people just go to the dollar. They cash out. They cash out of the stocks and go into the dollar. Now, what's interesting too here, though, is here we've got the 10-year here. And so a rising 10-year means that people are getting out of bond positions, at least for the 10-year. They're getting out of bond positions. They're going to the dollar. And eventually what that does is it makes its way over to the broader markets, the broader indices. So these things are all kind of in the middle. Like, there's none of them are to the extreme of their risk ranges today. Yeah, well, I guess the SPX, is actually getting pretty close. There's, according to the risk ranges at least, there's a lot more downside than there is upside on the risk range today. Yeah, there's a lot more downside on the S&P than there is upside on the S&P today. Same thing with the ICA with the NASDAQ composite. But it's still not really to the extreme of the risk ranges. So, generally speaking, today is going to be a better day to look for shorts than it will be longs. But then again, also, just be really careful with your entries. Make sure that we are coming out of oversold conditions on the Qs or the SPY, depending on whichever one you're playing. Simultaneously with the VIX coming out of oversold. If the VIX is coming out of oversold, that means the market's going to start weakening. The prices are going to start going down as the VIX ramps up. And you see here we've got the VIX popping back up again. The trend is your friend. The trend right now is bearish. And so look for overbought conditions until things change. What else am I looking at here today? The dollar. So I'm looking for the swing trade on the dollar is pretty much the only other thing that I'm looking at for today. It's pretty close to, I don't want to say pretty close, it's actually, it's closer to the low end of the range than it is the high end of the range. I guess if it opened up right now, it'd be really close to the middle. But I'm willing to take the next 3 to 4 weeks to average into a dollar position for its next move higher. All right. And yeah, that's pretty much it. I'm going to take a look at gold. Gold is looking neutral, really. I think I'd be willing to wait to the mid 1700s down here. I've got the support line from somewhere. Good golly, the support line. Let me make this a little bit thicker so it's easier to see. And then we'll go to a weekly chart to see exactly where did I get this gold. Huh. Interesting. That's very interesting. That's a really old trend line right there then. That I put this trend line in after it peaked right there. And actually this is kind of looking like a Wyckoff distribution, isn't it? It's looking a little bit like it's if it breaks this red line right here, it could be headed down for a sustained amount of time. All right. Well, I think that later in the year we'll be coming into conditions that are conducive to higher gold prices. Second half of the year. For right now, I think it's time to take a break on gold. Oh yeah, oil. Let's take out oil. This is extremely bullish. This is an extremely bullish chart. This consolidation pattern, it could last a little bit longer than right now. It doesn't quite look like it's ready to break out yet, but it is definitely coiling for a big breakout. I hope it doesn't. I hope this all turns out to be trash and does exactly the opposite of what everybody's expecting. Because higher oil prices is just generally speaking bad all around. Like, I mean, it's just, higher oil prices, it just, the implications of higher oil prices is geopolitical instability, rather severe geopolitical instability, and also much higher input prices. If oil keeps going much higher than this, input prices for everything from anything that has to deal with transportation. It's just really hoping that some cooler heads can prevail in the world and geopolitics, and we end up with lower oil prices very soon, because it's really putting a hurting on things. All right, everybody, that's going to be my pre-market strategy session. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell. And I will see you at tomorrow morning's strategy session. I am out.